Participants are in listen-only mode.
Hello, everyone. This is George Roberts. Welcome to Tech Talk on BPA float turnover and float turnover channel indicators. Can everyone hear me okay? Yep, looks like you can. Same format that we followed before. Matthew will be covering the technical part of these two indicators, followed by Ron showing you how to actually use these in an investing sense, and then we have our Q&A. So with that, I'm going to turn it over to Matthew.
Okay, hi everyone. I'm Matt Sorrells. I'm lead developer on High Growth Stock Investor and George's partner on this, and we're going to be talking about two of our new indicators that deal with float turnover. And if you look at these, we have two PDFs that talk about the two indicators. The two indicators are very closely related. In fact, at one time we were considering making them one big indicator, but we split them up because it just made more sense to be balanced. The two indicators are loosely based on Steve Wood's book, The Precision Profit Float Indicator. And it's actually a fairly decent book, and I don't recommend investment books easily all the time, but it's a really fairly good read. Basically, the idea here is that a stock, like, here I have just a random stock from yesterday's Best of Woodward and Brown. The idea is that the stock's volume is all trades in a batch equal to the float of the stock, so that when a stock over a period of days, weeks, months, depending on the stock, finally everyone who owns the stock has sold the stock, and the ownership is essentially changed, stocks then find themselves breaking out. And so this indicator, it sums up the volume during a period of time equal to the float of the stock, and inside HGSI is already in the database, so you don't actually have to add them yourself, which is kind of a big win on Steve's indicator. So to show off how this works, I'm just going to make a new view, add the float turnover indicator. So you can find it easily by just typing float. There's the two indicators show up. Float indicator, the PDF guide goes over all the options, but I'll talk about them a little bit really quickly. Now, this first option, adjust the volume on NASDAQ securities. If you read the book, basically the idea is that NASDAQ securities, because the way those issues are traded, the volume on NASDAQ stocks, at least in the past, would be counted twice. It would be counted once for the buy and once for the sell. So the volume on NASDAQ securities would actually be higher, double what it would normally would be. But that had more to do with the way the NASDAQ offerings were traded through intermediates, and it isn't true so much anymore. And so this is why this option is off by default. But we do support it, and if you check this box and the security you're looking at is on the NASDAQ exchange, we will adjust the volume. We basically divide all the volume by 2 if this checkbox is on and it's a NASDAQ security. I don't actually recommend anyone use this. It's not a very practical option. These two, the percent of the float and the fixed float, I'll talk about here in a second once I get the indicator up. The other options control how this indicator will draw. And so let's just put it on by default, and we'll go back in and edit these options to show you how it works. Now, the first thing you might want to do when you add the float turnover is to put it above the price in the chart window, because when it draws the filled mode, any indicator below it will be drawn on top of it. So having it be first in the window makes for a better view. So here we go, and by default what you get is 2 lines. The most important part of the float turnover is actually this this length right here. The width of this bar is the turnover starting with the last day going backwards. By summing up all the volume down here, the total equals the float at this point where the line ends and the little blue dot is drawn. And so by default, the key trick to the float turnover is the size of this box, the width of it. The high bar and the low bar is the high of the stock during that turnover period and the low of the stock during that turnover period. And so as you can see, during this box of time, the stock hit this high point and it hit this low point. The blue dot it indicates the beginning, when the turnover period started, and the turnover period ends at the last day of the bar. The fill turnover box, let's just turn that on real quick so you can see what it does. It basically just fills in the box so that you can see the box clearer than when it's just lines. You can turn on and off. You can change the end marker to be a line, so it draws a blue line at the end instead of a blue dot. Or you can remove it entirely with no marker. The dot is one of Steve Wood's books things, and it actually it just floats above the high of the stock on that first day of the turnover period. So its actual height doesn't really matter. But it is a nice visual indicator of where the turnover period started. The color options obviously let you control the high and the low color and the end marker. The draw multiple turnover periods. So this is one turnover. The volume down here adds together to be the float of the stock, which took this many days to trade through the entire volume. If you turn on the draw multiple periods, we compute the next turnover period over and over again, all the way back through time on the stock. And so you can see each one of these boxes actually represents the same amount of volume equal to the turnover, equal to the float of the stock. So when the box is very wide, it took longer to trade the float of the stock. When the box starts to get narrow, that means the volume in the stock is increased, the amount of trading, and so it's trading faster. And the amount of float the float of the stock is completely exchanged during each one of these periods. And you can see here on this stock that it's actually starting to get, it's trading more, the volume is increasing as it's getting closer to the current day. These back here in 2011, it took much longer to turn over than it is here at the end of the chart. And you can see in the data window, you can see how long the last turnover period was, when it started, when it ended, and what the high and the low value for that day was. Now, unlike a lot of our indicators, when you change the crosshair, the crosshair determines the day that we start computing the turnover forward and backward. And so as you move the crosshair, the computations go relative to that day. And this is because there really isn't any way of knowing whether or not every share of a stock that's outstanding traded at any one particular moment. And so part of the idea behind Steve Wood's concept of this float turnover is that you start the counting at moments where the stock bottoms out, and then from then on the grounds that when it reaches that low point, that everyone who's wanted to get out of the stock will have gotten out of the stock. And so from then on, all the trades that happen in this window are basically new turnover. And so you, by putting the crosshair at these pivot points on the stock, you can start to see that there actually are patterns to it trading the outstanding float of the stock. So one of the comments, let me talk about this real quick. If you turn on the fill turnover box in the indicator, you've got to make sure that the float turnover is higher in the window than the price, because it draws in order from the top to the bottom. And so float turnover, it is drawn first, and then price is drawn on top of it. But if you take price and you put it before the float turnover, you won't actually see the price because the float turnover window is blocking it. And you can see here, when you put the crosshair near the end of the chart, there isn't enough volume in the days remaining to turn over the float. And so another turnover box is not drawn until you either move the crosshair back far enough so that a full turnover, see, a full turnover is appearing there. But if the start date, the crosshair, is too close to the end, a full turnover is not actually happening here. And so you can see how the price is behind the indicator, but it's being blocked. And so you've got to basically just edit the view, select the turnover, and use the up and down button so that it's behind the prices. By default, we show in the data window, we show the last turnover and the next turnover relative to the crosshair, and the stats are the number of periods that the turnover took. So with the crosshair here, this is 173 periods, and this is 128 periods. So this box is wider because it took longer to trade the float before this date, and then it got shorter because the volume down here during this time period was higher. the percent of float and the using the fixed float controls what number we use for the float of the stock. So for example, at 100% we use 100% of the float, but if you change this to 50%, we have the float of the stock. And so each one of these boxes is a turnover of half the float as opposed to the whole float. From a trading point of view, Steve Wood's book goes into more detail, but there's some inherent value to 50% and 25% seem to be fairly accurate for many stocks fall into this pattern that 50% of the float actually does represent a more accurate level of turnover. But you have to realize that it's kind of a theory. You know, not everyone sells just because the volume traded. And so it's very much it's more of a concept. And so as part of that, we also let you tell us exactly how much float you want to use. And when you do that using this fixed float option, the percentage will still apply to the fixed float. So I'm changing it back to 100. So in this case, each one of the boxes represents 500 million shares. So this box, the volume in this area down here, the volume in this area down here equals 500 million. And so in this sense, this indicator starts to become a way of exploring volume over time using a fixed amount. And this is true when we're using the float, which scales the indicator for each stock you're looking at. But in this fixed mode, you can kind of see how fast the stock is moving relative to that fixed volume. It can also be useful if you have more, if you have a more accurate float number than what we have, and you wanna here's what 50 million. Each one of these boxes is now 50 million shares traded on for that stock. So now let's take a look at the other indicator. Let's just duplicate this view and add the channel. So on the channel version, the controls are still very similar. You still have control over the float, the percent of float to use. The difference is there are 3 lines. The 2 continuous channel lines are these same high and low lines that the individual float turnover used, but they're computed instead of, in this case, where they're computed once for every float turnover period, these lines are computed continuously. So for every single day, imagine how many days back from that date it would take for the volume to sum up to the float. And then that becomes the point on that day for the high and the low. And then yesterday, the same computation is computed again and again and again. And so you end up with a continuous version of these high and low lines. And then to this we added the turnover days. The idea behind this is on the turnover days, as the volume being traded is higher, the number of days it takes to turn over the stock goes down. And so this blue line is essentially the number of days from each date. From this day, for example, backwards, the blue line is how many days it would take for the volume to sum up to the float of that stock. And so, as you can see here, the volume on this stock has increased a whole lot in the last month or two, versus back here where when the blue line is increasing, it basically means the volume has gone quiet. It's not as the volume is not moving as fast as it was, and so the number of days it takes to turn over the stock is getting longer and longer. The continuous high and low lines are are plateaus essentially over that many periods of how much of the high and the low price that the stock traded at during that time frame. And so the idea here is that when a stock breaks out of its high or breaks out of its low channel into a new above the previous turnover period, it indicates that the stock has changed hands, and so there's some strength behind that move. It's a point of resistance essentially, and so like when this stock here, no, that's not very good. When it broke out here, this should have provided a certain degree of support behind it, and obviously in this case it fell apart. It's not, no support line is a fixed thing, but every time you see the stock break out above its high channel on the float turnover, there's a certain degree of strength there behind that move. And in this case, though, when it failed to break out and keep making new higher highs, this becomes a level of resistance. And so this stock, you might not want to consider entering it again until it basically comes above this this previous high here, because there's a certain amount of resistance there in the turnover, and that's really it. While it looks like it's very complicated with this live interaction thing, the concept behind these volume boxes is fairly simple. So let me see. There's a couple questions here, and then I think I'm going to turn this over to Ron. Touch on the efficiency of this indicator. I think Ron's going to need to talk a little bit about it. Is this the best trading indicator? No. It is a way of interactively seeing the volume on the stock itself. And for some stocks, more than some, you will see there definitely are Darvis box kind of trades that equal the float of the stock. Let's see, I'm not sure, there's no real way to tell whether the recent increase in volume is institutional distribution. I mean, all we know is that it's trading more. This indicator does let you see, though, that it's a way of visualizing the volume that's perhaps a little bit better than the histogram at the bottom in the volume. What was the point you made? So you get all the boxes in the rather than just the most recent. So to get the float to turnover to draw multiple turnover periods is what it turns on the multiple. If you don't have that checked, you only get one one turnover period before the crosshair and one after. And when the crosshair is on the last day of the chart, there's no turnover box in front of the crosshair, so you only get one crosshair. And I think that covers the questions that have come up so far, and I think I'm going to hand this over to Ron.
Okay. Can you hear me?
Yes.
Okay, good. All right, so you answered most of those questions. Brad, I misunderstood what you were talking about. What you were talking about, Matthew took care of. Now, my charts are different than his. He just started with a blank chart, and what I've done is I have put both indicators in a split window chart. And the reason I did that, I think it's just easier to visualize what's going on. Now, I'm going to edit the current view, and as Matt said, you have to make sure that these indicators are above the price, and that was Brad's question. I misunderstood him, or I didn't know what he wanted. But if either one of these were down, if price were above those in it, then you can't see through the transparent box. So if you build your own charts, remember to put those above the price. And you see that I did that on both windows. This is my float turnover channel window, which is this window up here. And this is my float volume turnover channel here. Now I am making a few changes in my charts and views and so on, and I will get those posted when I get the BPA add-on ready to go. I'm not ready to put it up yet because I'm still changing things. So your chart may not look just like mine. In fact, I know it won't, because over here I put a couple more fields in the warehouse view, and I did that because somebody sent me a question about the percent of the shares out and the short interest on these shares. So why don't we I just happen to have Ambarella up here, which has been a disappointing stock for the longs, but you can see that it has a very short float turnover. The float is only 28.1 million shares if you look over here on the left, and you'll see the float turnover, and these are warehouse numbers. Matt showed how you, by bringing up the indicator, we can see the length of the most recent float turnover, but on average it turns over about every 14.5 days. And that is a very quick turnover, and you can see in conjunction with this turnover when Ambarella is going down, that with the blue line going down, it means that the float was turning over faster. Why? Because people want to get out of this stock. I mean, it's pretty obvious when it's falling that when the volume picks up, and if I draw a line across here, you can see that this volume in here is much higher than over here. These are just rough estimates, but when the blue line is heading up here, it means the volume, the float is not turning over as quickly, and we had a stable, pretty stable period in here as traders and investors were waiting for earnings to come out, and then earnings came out, and you can see what happened. This is a stock that's closely tied to GoPro. But what I like to look for are multiple things, and the volume turnover, the float turnover, the speed of it, which is this blue line. I like to see that if a stock is going up, preferably this is also going up, which means there's buying pressure, but it doesn't always mean that. because if a stock is moving up, and let me go back over here to this area, and for example, during this time period right here, I'm just going to draw a frame around this so it encompasses both indicators. You can see that the stock was rising, but the blue line was going up, which means the float is not turning over as fast, which means that the volume is not increasing. Now, why do you suppose that was? Well, it's because the holders of the shares were just holding on to them as it bounced off of this line and started moving up. They weren't, it wasn't turning over because it was more of it was a short term, but it was a short term buy and hold period. So you can see the blue line doing a couple of things. If you see a stable period, and this is just my interpretation, but it's just from observation. If you see a stable period, it looks like it became stable. Well, let me put my crosshair on. Oh, you know, right in here before it started to rise. Here, there was volume coming into this because the stock was starting to rise, so there was interest in the stock, and you can see it. I wanted the arrow, not the frame. Down here, volume was increasing, and while it's increasing, the blue line's going down, which means the float is turning over faster, and then it pulled back. But notice it did not take out the low over here. Here is where the low of this turnover period was established right there, and when this came back down, it did not take the low out, and if you look down here, the volume was very light. You can tell this by looking at the individual bars, but you can also tell that the volume's light by looking at this because the blue line is going up. So the speed of the turnover was not fast. I hope that makes sense. So there's a question, would you say the recent increase in volume is institutional distribution? I assume that you're asking about AMBA. Yeah, I would, you know, who knows? It's probably institutional distribution. This stock has really taken a beating. As you can see as I zoom out of this, and there are multiple periods during the downdraft where this stock was going down sharply here, and you can see that the volume was going up at the same time, and then it turned quiet right here. But I would say when it's falling fast like it was here and the volume increased pretty dramatically, that I would say there was a lot of institutional dumping hit there. But it was probably worse. Let me start over here. Up. Got to get my keystrokes figured out here. I'm going to go to a yellow. Right here, after it reached that peak, you can see that there was really heavy dumping of the shares right here. And then the volume, the turnover started falling off, even though the stock continued down. Some of the selling pressure was coming off of it here. I assume, you know, traders were looking for a bottom at that point. So, I mean, there's no perfect correlation. You can see that, but you can certainly get a good idea of when the turnover is moving up faster. Now let's take a look at it right here. I'm going to zoom in on this to this point right now, and here's what Matthew was talking about. When you look up here, now the low point in this float turnover period was established right here, and this line carried over. When that line was broken, theoretically, it's a good time to go short or get out of this stock. Now, it has fallen from that point, but if you see what I mean, this was a solid, well, here's the line right here, this red line, which equates to this low point right here. And then when it came down, it failed to break out, and it came down, and it fell through there. That, during this float turnover period, this became the new low, and that was the time to bail out of this stock or to go short. Now, right now, pressure is still on it to the downside. This was updated today. This is using intraday quotes today, and I don't see any progress in this stock right now. The group is going up, and this is why I put the group line in here. You can see the group is still going up. The volume was coming down with the selling, and now it's leveled off. The blue line is right behind my yellow arrow, and maybe we'll start to see a little accumulation. I don't know, but it certainly doesn't look like anything I'd be interested in right now to go long. Theoretically, it would, as Matt pointed out, before this float is going to turn over again, it's going to have to take out this high right here where there would be new ownership. Now, that is if 100% of the shares turn over. I think, as Matt said, the number maybe 75 to 50 would be a good turnover number to use, because I don't think everybody is probably bailing out of these stocks. It just doesn't make any sense. I know the institutions would certainly have trouble dumping everything. So you may want to shorten those float turnover numbers, but this is set on default right now. Let's see, float turnover. You can see that it's at 100% of the float, but if I put this on 50, watch how this box gets a lot smaller. That would mean that only 50% of the float would have to turn over. Let me go back and put it back on the default. Oops, sorry about that. Got the wrong. Go back to 100. So how can we use this thing? Well, the turnover, I like the turnover concept, because rather than looking at just a bunch of bars or candles, whatever you're using in your chart, we have a good idea of when the volume was enough to turn the entire float over. So that means that there is new ownership in a stock. And with new ownership, there may be or there should be a shift in either optimism or pessimism about a stock. Now, we need to see something that is a lot more constructive than this chart if we're looking to go long. We're in a bullish trend right now. There's no question about it. So we should certainly be concentrating on the bullish side. Now, this is a view that you have. It's down under your VPA files, and I'm going to be updating these, like I said, and there will be some changes. In fact, I put a couple more fields in this warehouse view. You can add them if you'd like. But here is a filter with the float less than 50 million shares and the turnover 30 days or less. And you can see that Umbrella comes up in this group of stocks. Now, when I sort on the demand combo, which is the combo which is attached to this, you can see that the stocks which were most in demand today based upon that combo are at the top of the list. And here is Bill Barrett Corp. I believe that's an oil, well, it is exploration and production stock. And I'm going to change the color to red and point some things out. This thing was up 12.3% today. When when the Fed made their announcement, the dollar collapsed, oil shot up, gold shot up, and this was a recipient of the oil stocks were a recipient of that relationship. You can see that this comes in under the 50 million share float level at 48.8. The average turnover is 23.3 days. I need to put that phone on the floor. The float, the percentage of the float that's out and tradable is 97.9, so it's nearly 100%, and the percent of the shares short of the float that's out are 19.1%. So nearly 20% of these shares are held on the short side. And what can happen there when a stock starts moving up like it did today, if there's a fairly high short interest, it can help drive these stocks up in a hurry. I had to take a little drink there, sorry. Looking at some of this other stuff, we know the group, we know the accumulation. Obviously, the ERG numbers are not going to be good, but the relative strength number, which in my opinion is the most important component number in there, or component of the ERG, I should say, along with the accumulation. It's more important because it shows us the strength of a stock compared to all of the other stocks, securities out there. Now you can see that today, and I said I ran an intraday update, so this is as of today. There was an up bar closing near the high or an effort to rise. And look over here at these trends. There are confirmations on the long, medium, and short-term trends. So this is good information to know, and it's all right in here. Now let's take a look at this. Here's that float information that Matt pointed out. Here's what I'm looking for. The institutionally held, we don't have an institutionally held on. I think that number has just not been reported on this stock. It's a very inexpensive stock, but normally I look to this to see how many, what percentage of institutions are holding a stock. Now let's take a look at this. I want to show you this with the turnover period, which was back here. See this basing turnover period? And then the top of this range during this float period was represented by this red horizontal line right here, and there is the high point of this float period. The float period is from here to here. You get comparable lines up here. Now, theoretically, the buy point would be when it surpasses this area right here, this horizontal line right here, because the float has turned over and there is plenty of buying pressure. How do I know there's buying pressure? Because this blue line has been coming down as the volume has been going up. And consequently, the buy point here, if it were at $4, it closed, what did it close at today? Well, I need to click on that date, just a sec. Closed at $5.74. So from $4 to $5.74 in a matter of a few days, and now you can see that it's been basing sideways. This is now the current float turnover period, represented by this gray box. So it encompasses from here to here. Now, if you go along with that theory that when the float turnover is finished and if it breaks past the current high, which is represented here and here, this would be an opportune time to buy this stock, especially if the buying pressure continues. If oil continues to go up, this stock is probably going to go up. That's why I always put these group lines in here. I keep harping about the group lines because they're so important. Now Gwen's got a question here, just a second. Gwen, did you build your own chart? Just use my charts. Then you won't have to deal with it. But you're going to have to go in and edit it and do what, if this is your problem, and I assume it is, you're going to have to make sure that price is at the bottom of your chart. These indicators have to be on top. What do you mean you can't see the price bars then? That's your problem. That's the only thing that can be. So just use for now my VPA charts, and I've added a few charts in here and rearranged some things, so yours are going to look a little different. But just go under float analysis. Here's black ones and here's white ones. Just go in and duplicate mine and play with them. Make sure you duplicate them, and then you can delete one of the indicators and leave the other indicator there. Now, let's take this a little bit further. Since I have this up here, I'm going to click on my next chart. And this, I believe, is really where the power of float turnover combined with VPA gives us a leg up. We can see that during this float period down here, well, I need to click below here. Darn it, what am I doing wrong, Matt? Do I need my crosshair on here? There. As you can see, when I put my crosshair on here, here's no supply of sign of strength, and the volume is very, very light here. That's starting to tell us that there's no selling pressure. Then it moves over here. I do not have the group line in this chart. I should probably just put it in there. But when we get over here, you can see that there is a signal strength seen returning after a downtrend. And how do we know it's strength? Because this closes near the top of its daily range and volume is increasing. It's a little bit higher than these previous bars. That's why this flag is generated. And then on the next day, an up bar closing near a high following a buy condition. The buy condition was previous. This confirms the return of strength. And look at this thing. After that, that was the low point. And then we had an effort to rise here on heavy volume. You can see as the volume's coming in that this blue line is going down, which is showing us that there is strength coming into this. And that's right here. The next day is when it broke past this high point of the float turnover period. Then here's another confirmation here. And here where you're starting to see some profit taking. When you get these signals that of a transfer of ownership and a potential buying climax, it doesn't mean the run is over, but it often means that you're going to have to go through some sideways consolidation and basing before you can move higher. Let me just do something here. See, someday you'll be able to do this as fast as I do it, as fast as Matt and I do it. No, I didn't do private scale, did I? You have to use private scale. Okay, and then the group line's in here. Group line is so important. Look how this stock and the group pretty much track together all the way through. Of course, there's going to be discrepancies and divergences, but not that many. So it's very, very important. Okay, now I've been talking to Matt and George, and at some point they're going to try to figure out a way that we can filter this. So we'll get an alert, not an alert, but there will be something in a warehouse column where we can figure it when these ranges are penetrated on the float turnover. That's not here. It's something down the road. I don't know if I should have mentioned it or not, but don't you think that in conjunction with the VPA could give us some really beautiful and helpful signal when this float is turning over and when it penetrates this area up here, which defines the boundaries of the highs and the lows to this. Let's look at another stock here. Here's outer wall. I'm going to just quickly go across here. This is a more expensive stock, 39.23, up 4.6% today. The float's only 17 million. Turnover is 26.3 days. Percent of the float to the share out is over 100%. I don't know how you do that, but let's just say 100% is out. And look at the short interest on this. 52.7% of the shares are short, and we have a relation. Yesterday there was a transfer of ownership signal, so there may have been some selling or some buying. We have to look at the chart to find out, but the trends are all up on this also. Okay, here is that transfer of ownership. You can see that it gapped open. It traded down. The close was below. Here's the open, here's the close. So the close was below the open and volume picked up. That indicates that there was some profit taking. But it doesn't look like it slowed this stock down because it opened just slightly lower, then it closed, and it closed near the high of the day, but it did it on lighter volume. Still, there are some after this pullback here, this was an upthrust bar. Immediately afterwards, there was a test, low volume test for supply, and then this is a confirmation of that test, and it started moving up again. Now moving back here to this area, and I'm going to freeze it right here. Let me make this full screen so it's easier to see. And I'll put a frame on here. Okay, this represents the float turnover, volume float turnover area. Now notice that this stock was lagging its group. Once again, this is why I like to have the group line in here. Group's going up, this one's going nowhere. You can also see that the volume is really going nowhere because it's flat across here. There's not volume increasing coming in. But look what happens here. The volume is getting less, and you can see that down here. But what is happening here? It broke out past this high, this recorded high back here from this float turnover period, just barely went above it, and it is testing that again right now, and then at this point it went a little higher before this move up yesterday. No, Bradley, it's the industry group. It's not the current group. The current group would be the group, if I made a group of all these stocks which are passing the filter and generated the index, that would be the current group. Yes. Oh, I'm sorry, I misread you. This type's pretty small on my screen. No, it's always the industry group. I do have some views that I'm putting in the next release of my VPA, which shows both the current group and the industry group. You probably already have them, but I'm going to point them out and make that more visible, because sometimes it's good to know when a stock is outperforming both its industry group and the current group. So right here, this stock is making progress, and it doesn't have anything to do with earnings acceleration. You can see that that's negative, and the current quarter estimate is going to be more negative than the same quarter 1 year ago. But I'd say this stock is probably being lifted by its group right now, even though the volume isn't coming in to really support this move up. Yes, we had a good volume spike yesterday, but notice that it fell off today. So I don't know. It has broken out, though, of its float turnover range. So it's one you should probably keep your eye on. But this is what I don't like about this stock. Well, there are several things. Look at this relative strength number, 20. It's basing. The group's going up. The group is only 27, though. But the longer it bases, that's what, in Wyckoff terms, that's called building a cause. And if it breaks out of there with some decent volume, it's certainly got a good chance to run. Whoops, I didn't want to do that. Let's take a look at one more. Let's go down here to the bottom. This is a stock that was down 3 point, let me find the worst stock here on a percentage basis today. SIEN. Don't know anything about this stock. It's a medical equipment. The float is only 7.7 million. And in this VPA chart, I did not add the other information yet. So let me look at this. 8.5. It turns over in 8.5 days. So on average, let me get that out of the way just for a minute. Float turnover is 8.5 days. You can see that. And here's the float. So it turns over very quickly. Only 42.6% of the float is out, and 36.2% of the float is short. And let's take a little longer look at this one. I obviously have not looked at any of these stocks. We're doing this together. So here's the turnover period. It pulled back, but it pulled back on light volume, and there are several ways to see this. This blue line has started going up, so the volume is getting lighter as this float turns over. Now there was a negative effort to fall signal here. It bounced a little bit, but it didn't fall through. The group, what's the group doing here? Going the wrong way, of course. Group ranks only 9 on this. So the healthcare stocks, especially the biotech and the specialty pharma stocks, have just been getting creamed. I don't know what they did today. I didn't pay any attention to it. But this stock is it's just in a consolidation period right here. Not anything really to get excited about either way. Either long or short, because volume is totally fallen off, which suggests that there's not a lot of selling pressure left in here, and it's been basing in this trading range for several months now. I wouldn't spend any time looking at this. Look at the earnings fall off. Revenue and earnings are both decreasing, so it's strictly in a holding pattern. But these views are in here for you now. I added these two columns if you want to alter them before I update them, and I'll try to get them out maybe after this weekend. I'm just not happy with, I'm not finished with them yet. I added these two columns, float, percentage float divided by the shares out, and the percentage short interest divided by the float. That's in there, very easy to find. But if you're looking at these for prospecting, I would certainly come in here and just use these and sort on the raw combo. And the ones that are coming to the top of the list, those are the ones that I would be looking at the long side to see if there are VPA signals, and also if it is nearing a point where there is a complete turnover of the float. Let's just do one more here. Did I do this one? I don't think I did. Let's do this one, and then I'm going to see if there are any more questions. Now, this is a pretty loosey-goosey stock, as you can see. During this turnover period here, right here up to this point, and I'll freeze my screen, you can see that between here and here where it turned over, it came up nicely. Look at the VPA signals on this stock coming off the bottom right here of this float period. Then it got up here, it stalled, it established the high. That high was established right here, came back down, a couple of supporting VPA signals, still didn't do anything. It did not break past that high though. If you like to use this area here as a resistance area and as a potential buy point, it didn't do it until right here on this day when it broke through that area, and that was on a gap up, let's see, Monday, Tuesday, Wednesday. That happened on Monday, and it's going higher from here. Now notice that the volume is starting to come in because the blue line is going down. What do we have here? We have a strong group at 91, relative strength is 86. Earnings, although negative, is increasing. Revenue is terrible, but power equipment, this stock for some reason is being bought, and I would suggest that it's following along with the group. Any questions or comments about that? Or what do you want me to look at? Another way you can come about this is just look at the VPA signals. Let's do that. I'm going to go into my smart groups, Woodward and Brown, stocks and groups moving to the upside. This is as of the market close today, okay? You can see that I have the filter on, float less than 50 million, turnover 30 days or less, and here is a familiar name, Lending Tree. The volume was lighter today, but it was up 1.6%. And when I start looking at these numbers here, let me get that out there. Float's only 9.4 million shares, turns over in 10.2 days on average. The percent of the float that's out is 71.9 and 21.4% short interest. So, relatively heavy short interest, 21% of it. If we bring this chart up, and I'm doing this on the fly again, so you're going to analyze it with me. Yeah, Scott, Wood's book, in fact, if you go back to the bulletin board a couple of weeks ago, somebody, some HGSI member posted a link to the book, a PDF version of it. Somehow it's out there in the public domain, and it's available to read. Now, his approach is not necessarily exactly like our approach. This blue line Matthew put in, I don't believe Woods mentions anything about that. Yeah, you need a few hours. We all need a few hours, Scott. But anyway, yeah, go through it. But this discussion here should help. Now let's go back here to this float period right here. Once again, I'm going to freeze it. When I bring up my drawing tools, I freeze it. Here's our float period, here to here, and here to here. Now this is probably a good example. Look at all these VPA signals down here showing support and buying coming into this stock. The group was going up, and this is our, let's see, our established high point during this period was right here, and it broke past that. If I'd have moved this back a little further to the left, the high point would have been, well, it could have been clear back here. This is the float period we're working with. So let's say you see it here. Here's your test for supply. And then the next day, here's an effort to rise right here. I believe earnings came out on this stock, and it came out on heavy volume. And then it started going sideways again. Here is the next float period. Notice with this blue line going down how much smaller this box is relative to this box. So there was a lot of buying interest at this point, and it had to digest this buying interest. Here's a new high that's been established up here, and this is getting near the point where it's going to, if it has a decent day tomorrow, it's going to break past this float turnover period. Now, you know, it's a 90, let's see, what is it? I went too far. It's a $91.40 stock, so you know it's a little more expensive, but it's getting near the breakout point. Now notice that after this initial rush with the buying coming in, this blue line is actually going up as the volume is falling. What does this say to you? To me, it says that the buyers are probably holding and are looking for higher prices. ETFs don't have they don't have the information. The ETFs are composed of multiple stocks, so no, they're not going to have it. Yeah, I know. No, you're not going to have the information you need because you're looking. You don't know what the float is. I mean, stocks are added and subtracted all the time from these ETFs. But what you can do. Go ahead, Matt.
ETFs, they're actually they print more shares as people buy the thing, so there actually isn't an outstanding float, but you can still use these two float indicators against them using the fixed value. And so pick a number like 100 million shares, and so you can create a view that the float turnover is always using 100 million or 500 million. For ETFs, the volume is very high, so I'd recommend using, see, like in this case, the number he picked is this.
1 day.
Yeah, it's you need to pick a very high number for these ETFs because the volume is so high. But you can set up a view that uses just some fixed value. Yeah, you're going to want way more than 5, like 5,000.
Okay, yeah, I'm going the wrong way.
Yeah.
I'm tired here.
So
Should I
basically,
that?
yeah. So I think that's 5 billion shares traded, And so you can use this even on symbols that don't have float, but you have to use the manual enter a number mode. But it still lets you explore the volume as a function of turning over a bucket of volume. And so you will be able to see acceleration and deceleration. Of course, you have to change every float turnover indicator you have in the view. You really have to set this up in advance.
So, Matt, during it, you suggest just devoting a chart.
Yeah, a whole view. Yeah, a whole view with
labeling.
A fixed value. Maybe, I don't know if 5 billion is a good number or not. It depends on the thing you're looking at. But you can see here there's the volume increases and decreases, and the boxes get wider and shorter depending on that volume. So you can use these tools, but it's not quite as convenient as a...
Yeah, it's not as precise, but it does work.
And like I said, you can set up some views that are using fixed values so that you can get all of these same kind of indicators. And since the whole idea of float turning over is kind of a theoretical thing anyway, even just using a fixed value, you do get to see visual patterns to the trading, because this is really just a way of visualizing volume. Kind of bring the volume out from below the chart into the chart.
Look how the volume has increased from December of 08 through today. I mean, it's massive. Look how these boxes have gone from very wide to very short as the activity has picked up. Now up here, I would have to go and add the same information, right, to get that blue line.
Yeah, you have to fix every copy, and that's why I say you should probably set up a view for a fixed value.
Right. What I would do is just duplicate it and label it as an ETF view with so many millions of shares or whatever.
And you can also use the same trick with major market indexes that have volume. Not all the indexes have volume, but some of them do, and you can use the same option. That's pretty much why we included the parameters so that you could do it originally.
Let me try something here. I'm going to go down to my broad market indices. Well, obviously I only have 2 years here, so, and I would have to change the numbers. See, there's all securities. Yeah, you'd have to just play with the numbers, obviously.
Yeah, and one thing that's interesting there is that it has to round the volume up, and so you end up with 1 day, even though in theory it could have traded several float intervals during that 1 day on all securities because the volume is so high, but it rounds to 1 day. Also, it is period based. So if you look at weekly or monthly charts, the numbers are period based. So it scales all the numbers into the period.
I'm back to GDX here on a weekly. This is a weekly view of it. That's what you're saying, right?
Yeah, so it's how many weeks it took to turn over that volume.
Yeah, well, that's really interesting. Well, we'll have to look more at ETFs and just pick an arbitrary number and see how it works out. But what you're doing is just visually comparing the boxes. And I don't know if the number really matters that much if you get something so you have a comparison anyway. right? I mean,
yeah, no, I mean, it starts to become, you know, like I said, you can just pick an arbitrary level, depending
yeah.
on the thing you're looking at, um, uh, and then you can get a feel for the turnover rate, and obviously the continuous channel with the lines, the blue lines, and the highs and lows, you can start to see visual patterns to the price and how the volume and the price move together in these periods of turnover.
There you go.
Now, whether or not it's a great trading tool, I don't think it's a mechanical trading system, which is why ours is more of an interactive kind of thing. I'm not really convinced that you can mechanically trade these, but we are going to add some warehouse filter columns, which will make it possible to do at least breaking out and breaking down the high and low continuous channels. We'll have warehouse columns in some future version of HGSI in the next month or two.
Good. ALJ says, what's a good turnover rate in days? That's really hard to say. I mean, I don't know if there is such a thing as a good turnover. What you want to see is you want to see the turnover rate increasing if the stock is moving up, and you want to see the volume moving up with it generally. But, you know, if it reaches a plateau point and nobody's selling it, that blue line is going to level off, and that's a good indication that people, as a rule, are holding on to most of the shares. But just think of it this way: the faster the turnover, the more rapid the move, especially on these low float turnovers. Let's look at another one of these. Well, Lending Tree is a good example. Let's go down to this 1 to 15, see what we can find. There's that Bill Barrett again. And here's another one that turned over in 21.7 days. I'm going to go back to this. I need to go to all securities and apply my filter. Let's see what the least, oh, that we already looked at this one. Float turnover is only 8.5 days, and I need to get it off the weekly chart, go to a daily. And, you know, it doesn't really tell you anything. What's important is that you want to see it turning over, and you want to see some movement. So as the boxes...
Yeah, I think you want to turn off the fixed float. You want to
Oh,
go
you
back.
think the fixed float is screwing me up? Let me go back to a different chart, okay? Let's go to this one. Okay, those are throwaway charts. So anyway, you know, very short turnover period, but what you can be assured of is if volume starts coming in to this stock and there's buying pressure, this thing's going to move quickly, because there aren't that many floats out there, many shares in the float out there, and demand creates fast turnover. But when you see these long bases on these large cap stocks, just remember it takes a tremendous amount of buying or selling pressure to move these stocks. Let's look at Microsoft as an example. I mean, look at the float here. These are billions, I assume, 7.6 billion. Is that right? Or 7? What is that, Matt? 768 billion?
I think it's 7.6 billion.
Okay. But
shares.
The float turnover is 187 days here, so it takes a tremendous amount of turnover based upon this float volume turnover theory to get this stock to move. Now, you certainly wouldn't want to be waiting for Microsoft to have to break out of here to say that, geez, I'm not going to buy it till it gets to that point, because it has had, you know, it came down here on a selling, this is a selling climax right here. You can see it. It stands out, and then it became under accumulation as it worked its way higher.
So put the crosshair on that peak day where it bottomed out there.
Right here?
Yeah, right there. And so one thing you can see here is that because there's no float turnover box to the right, that means since that day, all the shares of Microsoft have not traded hands completely. And so in theory, it's a good indication that any overhead supply still exists on Microsoft, because it hasn't from that bottom point, it hasn't actually exchanged all the shares yet. Now, Microsoft, these stocks with epic float and epic volume, their rules are a little different. They're kind of like huge tanks that you can't change the direction. They're big tankers of oil. But one of the things that this might work as is a measure of whether or not overhead supply in a stock has been exhausted so that it's safe again. Because in theory, rather than wait for the stock to come, it ran a high value for a long time and then fell off a cliff. And so you've got all this overhead supply, and using this as a way to tell when enough volume has moved on the stock so that that overhead supply no longer is a factor. And so you rather than having to wait for the stock to get back into the, hypothetically stock that had been in the hundreds and now has dropped to the 20s, you could use the float turnover as a guideline for how long it needs to base before it's clear again, so that then when you see volume coming into it, and VPA signals going off, that the stock no longer has all this hanging overhead and can actually move ahead, is part of this idea of this float turnover indicator.
And a stock like this, it's not going to turn completely over. People buy a stock like this and hold on to it forever. And the funds and widows and orphans, and people just don't sell stocks like this.
And for the big cap stocks, I think the numbers, you can't use 100% of the float.
No, I think you should use 75 maybe.
Or less even. There's not. It's not a science. There's not a lot of There's not a lot of research been done on this, but there are some interesting concepts, especially for mid-cap stocks. You can definitely see that there is a correlation to the float turnover being resistance and support. Which ties in with this whole VPA and volume at price ideas.
Yeah, let's see, Brad's got another question.
The significance of the height is it's the range that the stock traded in during that turnover period. And so a stock that had a wide range during that turnover period will be taller than a stock that traded in a very narrow base. And so you can't, it's a Darvis box kind of effect. And so a narrow box means it traded very tightly across that period of time. And so in theory, breaking out of that box may be more significant if the box was narrower than if it was a very wide-ranging stock that didn't moved all around the box. But
Yeah.
you know, there's no real math yet, I think, on exact they mean, but it is significant in that it is the range that the stock traded in during that turnover period.
Let's do one more, and then we got to get off
Wrap
here.
this up. Yeah.
Now here's a very loose. I don't have all the indicators. Oh, I do too, I guess. Now this one's float is 22.4, turns over 18.2 days. And with these narrow or fast float turnovers, I think it's more significant here, like these ranges, don't you, Matt?
Yeah, I definitely think this works a lot better on anything less than the big cap, big float stocks. They start to have their own inertia that's different than these Russell 2000-ish kinds of stocks. You know, small floats, certainly less than $1 billion.
I forgot to put that back to 100.
Back to 100.
Let me get it straight. Didn't make that big a difference.
But you do see that there definitely is a trading range there. It sells off in a, if not exact amount, proportionally the float amounts, which is, I think, why Steve Woods wrote the book and did the indicator work. Is he saw these patterns showing up where it would take about a float turnover to base.
Yeah, just think that on these smaller float stocks, that once the demand picks up, like it does here, and it breaks past that resistance area, there are a lot of people that want in. And then what happens, you know, after the initial rush? But actually here, the volume was holding steady. See that? Or going down, actually. So the buyers here evidently were holding on through this period. But once again, it follows the group.
And then they start to sell it off, and the volume picks up, and the group effect, and these are all interconnected indicators with the volume and the price. All there really is it is a system. It's not just a bunch of random indicators. They're very much a matching set. And thanks for coming in. And
yeah, thanks for listening.
Thanks, everyone.
There's a lot of exciting stuff here.